Hello friends, good week. Vladimir here with you, and this is the weekly review for 17th of October 2011. Well, we are now in very interesting situation, friends, as the last week was the US dollar losing its strength week. After the optimism from Sarkozy and Merkel, we had the dollar crashing it down. They gave us the optimism that everything is going to be okay. As it looks right now, it's possible. But I had a feeling that all this is just about to be some kind of non-successful trick before we have the next drop down. If we take a look, let's begin with the Australian dollar, for example, right? Take a look what's going on here. We have a trend line. Let's go for daily chart. Back to the very zoom and see what we have here. We have this long trend line from the very low, just from here during these lows, with one false break here, spikes, and we have the meeting of the line just right now, as you can see, right? It makes kind of a break. If we take it little for the spikes, it's on there. If we take a look here on this trend line, we are now just on the trend line, plus we have an amazing 200 moving average here. Plus, if that's all not enough, if we take a look on the weekly chart, it's a Marubozu, and we also almost, it's not exactly Marubozu, but very close, and we're almost on a 20 MA of the Bollinger Bands of the weekly chart. That brings me back to the US dollar. Take a look, friends, on the US dollar chart. This is a 4-hour chart. Look how divergent it is. From my point of view, as deeper it goes down, with this divergence continuing, the deeper the move up we will see again. If we take a look on the weekly chart again, you can see that we are still on the first up move after the break of the sideways. As you can see from here, a break up, now kind of retesting, and it should keep moving up more and more, and that's what we have on each chart. Now it brings me back, because on Tuesday we are going to have Bernanke's speech, and all markets probably is waiting to see what Bernanke is going to say, actually, as well. We can't forget the most important thing, the situation, and it doesn't matter how optimistic Merkel and Sarkozy and Bernanke will be, the markets are still in a bearish mood. And if you take a look on a weekly chart on each of the pairs, we can see that the broken trend lines are being retested, or almost being retested. For euro dollar, 20 MA is also a dynamic resistance, and the down move should and would begin. So is it going to be just a correction for the last uptrend, or is it going to be a next wave of the down move? This is only time can say, and all will be depend here on the fundamental news. And this week we have Bernanke, we have speech of Trichet at the end of the week, and also next Sunday is the meeting of the G20, and they are going to discuss about the decision of Sarkozy, actually, to fight this situation. It's going to be interesting. If we take a look now on the 4-hour charts, that's what we can see, friends. Each of the charts, each of the pairs has divergences, and these divergences will take effect, and they will stop the pair and begin the move down. Mark yourself the resistances. We have the 138.70 right now. We have one higher around the 139.20, 50. That's the same. And we have one higher, which is, well, actually the stiff resistance area here on the daily chart around the 200 moving average. I don't think we're going to see a rise still there, but everything is possible. But these divergences will take effect and we are going to see a move. And once this trend line will be broken, the 4-hour trend line will be broken, then the down move will take place and we are going probably to see all the way down again to around 135, 50, 80. That's the area, that's the support I believe this pair is going to reach. So I think right now, as higher the trend is going, the deeper the down move will be, and these divergences is only questions of time. If you take a look on Aussie dollar, same story, just same story. These divergences are so strong, so strong. It's going to make the move to reach one of the levels. Maybe it's going to stop just right here on 103.70, 103.80, 90. Maybe it's going to go a little higher to 140.20, maybe even until here 140.70, and make the down move. I expect the Aussie dollar, to reach again at least 101, but most likely the parity level once again. So that's my expectations. Let's move forward for a New Zealandian dollar. Same story, just same story. I do believe we are going to see a stop. It's going to happen very soon on one of the stiff supports area, and we are going to see full retrace down. How deep the retrace will be, or is it going to be a change of direction again? That's only time can say, and we will be waiting to look for that. The trend line down here on the New Zealandian is strong, and it's going to make the down move. So stay tuned for any possible down move. It's ready to begin. It just needs to find the right place to start from. So it's the time to get ready for the move. Dollar Canadian, the same story, but here I would little be more cautious. As we can see, we have supports area here, and trend line here. It also should make the move up. How deep it will be? Well, it depends. But dollar Canadian is little different story, because it's also affected from the oil, and this is why it's little weird pair to look at. Anyway, we have Marubozu on the daily chart. It should make the down move, the up move, the correction from the whole situation. How deep it will be, no idea. And this pair I like less than all others. Plus, the investors begin to sell dollar Canadian just from this area around the 101, with stop loss at 107, and open targets down. So it's something that we should pay attention for. But from my point of view, the main trend, which should be uptrend, is still here, and I think that we still have to reach the 108.70 or maybe even higher 110 before we can discuss for any change of direction. Let's take a look on another interesting pair, pound Australian. See this trend line? See how interesting it begins to be, right? And we have a 4 hours continuing divergence here as well. So I think also it's only question of time until this pair make the stop and begins the move. The resistances, each of the resistances will be the target, and I expect this pair to reach the 156.50 at least again. But let's say only time can tell us what will be true. Euro pound has an amazing resistance here around the 0.8790, and it could create for us a very beautiful divergence, a double top here, and make the down move. So stay tuned for this pair as long as it holds below this area. If it breaks this area, then it's going probably to take us for the next highs around the 0.8720 to 0.8820, sorry, to 0.8870, somewhere in between, to take this divergence for a down ride. I expect this pair to reach 0.8680 at least, or even lower, of course. We still have to remember this trend line, and for long run we have to remember that this pair is still sitting and testing the weekly 20 MA, and that the investors are selling euro pound. Also very important to remember. Euro yen, same story. The ride should continue little higher, should take us to around 108, maybe higher to 109 or 110. Each 100 pips here should be very important, and these 4-hour charts also will take effect. Look for the break of this trend line once it happens. 4-hour trend line, once it happens and it breaks, we are going to see the down move. Please make sure not to have full exposures for all currencies, and if you have so many ideas for each currency, just take two pairs with the same currency. For example, euro dollar, euro pound. Don't take 3, 4, 5, 6 currencies pairs with the same currency. You do not want to be exposed too much for same currency. Let's move forward, friends, and let's take a look on the indices. Same story. This divergence is a question of time. We have a stiff area just right here on the 12.25, and we have one little higher if we take a look just right here around the 12.40-45, and this divergence is going to make the stop, and we're going to see a retrace. That's why I said, friends, get ready, because from my point of view, I might be wrong. It might all be changed, of course, after Bernanke's speech or after the next weekend with the leaders of the G20. But from my point of view, all that happened during the last week, all this rise, all this up move is fake, and I don't believe it. I think it's just taking the positions. I think that the banks and the hedge funds are just taking the positions before the next attack down. This is my opinion. I might be wrong once again, but I just can't believe right now where and why the markets can really go up from. It all looks fake from my point of view. So this is my opinion, friends. I am with the dollar, as long as, let's go back for the US dollar and take a look on the daily chart. As long as this support will hold, just right here, this support will hold, I am with the dollar, and I think it should make the retrace up. So that's my opinions. That's what I will be looking for this week. I'm going to attack the pairs that are being trading against the US dollar, because my opinion is that we're going to see strong moves there. So enjoy your week, friends, and thank you very much for your time watching this video. Good luck with all your trades, and we are going to have many opportunities. Thanks a lot for your time. Wish you an amazing week. Great profits. Yours, Vladimir. Bye bye.